Well, without any delay, then let me get on board. Our first guest for today joining me is Feroze Azeez, who's the Deputy CEO at Anand Rati Wealth. Well, great to have you on the show, Feroze. We may be knocking at fresh highs, but, we've seen a lot of volatility kick in, right? And foreign inflows as well have kind of abated. We've seen outflows, to the tune of nearly 30,000 crore rupees on a YTD basis. Here on, until elections, do you expect, this volatility to continue even as we see, indices hitting fresh highs?
Good morning, Nandita. Like you said, we are almost knocking on the door of the highest close we've had, which is close to 22,100. So I think if you look at the market, it is not a very highly leveraged market currently. Of course, there are several parameters to be watched out for. If you look at the long positions of the FIIs vis-a-vis their short position in the index futures, it's about 38-40%, which is significantly lower than what it could have been at the peaks. Most often than not, when the markets are at the peak, the FIIs long positions actually inch up to almost 70%. So they're more short than long. That's point one. If you look at the OI of both the futures, which are more liquid, which is this month and the next month, the OIs are reasonably subdued. They're not very leveraged. So if you can get to a peak with huge amount of speculative bets, or you can get to a peak with more cash buying. It's more the latter than the former. That's point one. Point two, I think the earnings have supported phenomenally. We are looking at an 18% growth this year, not just on the Nifty. If you look at the growth on the mid-cap to 150, which is largely the benchmark which mutual funds follow, that's grown about 30% to almost about 757 rupees of earnings this year on an 18,000 rupee price. If you look at the small cap index, which is NSE small cap 250, which is the most commonly used index or the tier one index for all mutual funds in the small cap category, that's at about give or take 15,000 rupees in terms of price. In terms of earnings, is about 700. So I think earnings 14% growth in the small cap, 30% in the mid cap, and 18% on Nifty. These have created some degree of buoyancy, and that's why you see the trough for this financial year is about 17,000, and the peak is 22,100, which is 30% difference from trough to peak. I think that's supported by earnings. Now coming to the very important point which you said, FIIs have had outflows in this calendar year, almost about 30,000 crores, but that's on the back of a 66,000 crore inflow in December after the state election results came out. So I'm not too worried about the outflow in this calendar year because it succeeds a 66,000 or twice more the amount in the previous month.
All right, that's the view on the overall market. Then, but you mentioned the earnings season, right? I mean, we've seen PSU banks, autos outperform and how, right? So post the earnings season, would you look at sector rotation, perhaps rotating out of private banks into PSU names and, autos as a pocket? What are your thoughts on this sector? Because, we have seen a fair bit of outperformance come in, especially in the two-wheeler pack, right? But would you say that the valuations there are flashing red now?
See, I think auto is generally a sector which has a reasonable correlation to government spending. If you try and see whether government spending is a lead indicator, I think if you look at the kind of government spending which is going to happen, which is going to definitely push up the rural demand, especially the two-wheeler rural demand, because if you look at the 9-month figure in terms of the fiscal spending by the government, it's surprising and pleasantly surprising. Of course, only 56% of the fiscal deficit target has been penetrated of the revised one, which was read out in this interim budget, point one. Point two, by this time, in the first 9 months of any financial year, the average expenditure of the fiscal deficit stated for that financial year, 87% happens. So 56 has happened. So I think there is a lot of government spending which is still expected to unravel. So I think auto is trying to capitalize on that, and that's where you see some degree of rally. People betting on huge amount of rural demand, which I think will follow in the next 6 months.
Right. But, the point about private banks, right? Of course, there's a lot of concern about HDFC Bank. But, last week we've seen some bit of news flow come in when it comes to their home loan, business, right? Home loan growth. In fact, global brokerages are now predicting 50% upside, going forward. Would you say that the weakness that we've seen in HDFC Bank is actually an opportunity because, the merger synergies are yet to really play out, right?
Completely agreed, Nandita. See, if you look at HDFC, it's almost about 11-12% weightage on Nifty. That's point one. When two big elephants merge, you will have to give a corporate time to probably make sure that this merger is settled, and in terms of shareholder wealth creation happens over long periods of time. Of course, it's not such a simple thing. I think April 22 is when the merger was announced, and that's taken some time. So I would definitely see this as an opportunity, because the kind of influx of money which India will see will create the largest stock in the Nifty, a lot of buoyancy. And so this, I would certainly count this as an opportunity rather than an adversity from a shareholder standpoint, because of its kind of business model, point one. Point two, I personally think that as a conglomerate of these two businesses, they have a large potential. Of course, to get the whole business together, it should take time, and this is definitely an opportunity.
And about SBI and PSU banks in general, they still have a lot of valuation catch up to do when it comes to private banks, right? So from the PSU banking pack, do you think it's time to stick to the leaders like SBI?
See, I would not be qualified to comment on a specific stock. This was definitely a merger, so I just commented. But I think as a sector, I certainly think PSUs as a sector will have a structural re-rating over the next few years. If you're going to bet on something which is a re-rating, if you look at PEs of 10, 12, 13, I think they're abysmal relative to where the market is. Almost about 170 stocks in NSE 500 are greater than 55 PE now, and about almost 40 stocks are above 100 PE. In that, this is definitely a value pocket. But if you believe that this value pocket is going to unearth itself and create value for you, it's not going to happen in a year, 2 years. But I think in the next 5-year pocket, which is the next government tenure, whoever the government is, if the theme continues, I think there's a structural re-rating in terms of PE is definitely possible for the kind of assets they're sitting on, monetizing those and the kind of infrastructure. Some PSUs have branches in the nooks and corners of this country. I think they, from a financialization standpoint, they're more poised to capitalize. And I don't think India has done the financialization in the last 10 years, especially from an investment standpoint. I think 51% is the total financial assets, and 10 years back, it was 50%. So I think 10 years hence, I think these numbers will change. And I think PSUs are very well poised, not just for the NIM, but also from the fee income standpoint, to create huge value for the shareholder.
Right, a couple of more questions, Feroze. I want to get in your thoughts on the entire PTM issue. Lots of funds were buying into PTM before the RBI curbs really, came in, right? But here on, what kind of an impact do you envisage, especially for the mutual funds who are heavily invested into PTM?
See, again, not commenting on a specific stock, from an industry standpoint, I think there is some degree of empathy we stakeholders need to have with a fund manager. If there is a stock of that size, 50,000 crore market cap, it's impossible that 385 active funds don't have exposure. You will surely, whichever stock in India which will have some kind of speed breakers, mutual funds will surely have an exposure, as long as those are not business of 2,000 crore market cap or 4,000 crore market cap. So I'm sure when you look at it from a mutual fund investor standpoint, I think the maximum exposure is about 3-4% in a specific scheme. But the kind of value destruction on the direct equity side for people who've owned it is large, at least momentarily, and I hope it recovers. But I think the lesson to take away for most retail investors is direct equity is something which can create larger dents, because the diversification as a concept does not work. Most people buy price, not value, and the stock or the business. So I personally think mutual fund investors have had a very small impact when you look at each pocket getting an impact of 0.5%, 1% of one scheme. People generally have 10 schemes, so it's 0.1, 0.2% on the overall portfolio, whereas direct equity portfolios, I just analyzed one which lost almost about 20% of the full wealth of the direct equity portfolio which they actually own as a family.
Right, last question really, Feroze, in the run-up to the general elections, which is that one pocket that investors should be, looking at and, that can generate alpha? What are your thoughts there?
I think when you're looking at general elections, of course, there's going to be a gush of liquidity from FIIs if status quo remains, because FIIs love status quo, and that's what they've exhibited over the last 5 general elections. So I would say anything to do with infrastructure and the peripheral businesses like cement, steel, or anything to do with infrastructure and logistics will have a huge push if the same government were to continue. And that's where the alpha will happen over 2-3 year periods. I'm not speaking about the interim liquidity and the 1 month, 2 month trades. I'm sure that we can speak closer to the general election result.
All right, that's the thought then. But with that, Feroze, I'm afraid we're running out of time. Appreciate your taking out time and joining in this morning and sharing your thoughts. Always a pleasure chatting with you, Feroze.